Hey guys, this is our gold weekly analysis. Before we delve into the video, if you've not subscribed to my channel, kindly hit the subscription button and turn on the notification bell to stay tuned. Last week, all our analysis, everything I said in the video, happened exactly the way I said it. Just a recap, do not forget that I told you that this is our candle of interest. And as you can see, everything about the candlestick has been exhausted by the market. I told you the first stop is going to be by 400, and of course on Thursday, that was on Wednesday, the market touched that 400 and pulled back. Then the next, it got to the resistance level, which is around above 3430. So as you can see, just like I have always maintained, that gold has been seriously oversold in the monthly time frame, which means that this retracement is going to be massive. And as you can see, this very candlestick have finally confirmed it. Remember, we are going to break this video down to 1 hour time frame to find our entry and know exactly the direction to trade coming week. This is where the price got this very other block I marked here. That I will show you in the small time frame. That's where the price got last week, and this is the next target, and I will tell you why. The next candle of interest is DIX. So we expect the price to finally get here the coming month, because just as the candle is very long, also expect that this very candlestick is going to be very, very long. But when it gets here, there's every tendency the price is going to get here this coming month. But I doubt if one candlestick can do that. Apparently, we might be looking at from now, this coming month, to the months to come, to see what is going to happen. But bear in mind that gold is officially bearish. That is it on weekly time frame. Okay guys, this is 4 hours time frame. As you can see at this point, that is the next order block, and it is the reason why I placed this shape at this place. And I tell you for sure, coming week, as you can see here, the price just got to the order block and it left for one thing to happen, and that thing is the price of gold is going to come into this order block coming week. I expect the price to come into this order block this coming week and have the 4 hours time candlestick engulfed before there will be a retracement either the same Monday or Tuesday. But I expect this to happen on Monday. Let us go to 1 hour time frame to find our entry. All right guys, this is 1 hour time frame. As you can see, this very other block was DIX, was the same other block in the H4 which I have shown to you. And as you can see that the price got to it as we indicated in the H4. But there's what I want you to understand. There was no proper engulfing of the candlestick here to indicate a retracement, of the price, which means it's not going to happen automatically coming Monday. Just like you saw on the H4, there was no engulfing candlestick. I expect the price to return back into this other block and do DIX. And then here is the next target. The first stop is likely going to be here because of the next order block on H4. But there's one thing, the small time frame usually like to clear all the liquidities and find the nearest order block before the higher time frame, so which indicates the price is going to get to this point and obviously might spike up to a bit before returning back this coming week. But bear in mind, like I said, that gold is 100% bearish. So what we are looking for is just a temporary reversal for those who are expecting that gold is still going to continue buying. I personally say that it's a lie. It's on the bear side and it's going to continue bearishing. Let us also see properly why I said that this is the order block to look for when the reversal starts. I would like to use Fibonacci retracement. Alright guys, so let's do this. You remember the trend, this is the where the gold price got to the last week, and this is where it ended for the last week. That is the highest, the higher high and the lower low of the last week. Let's do this. To use this Fibonacci, I'm going to place it inverseward. One moment. Just as you can see, I want you to understand something here. Good. Alright guys, as you can see here, you will understand that using the same Fibonacci to measure the strength of the trend, you also find out that the same order block is at the 50% of the entire bearish trend. And for more clarity, this is where I used to take as my perfect entry, because I expect the price to engulf the 50% of the trend. But in some cases, it doesn't. Once the price taps into this 50%, it returns back. And in some cases, you see the price is going to tap into this 50%, do this, engulf this area of strong retracement and spike down. Sometimes it doesn't range before spiking down, to just go straight to the area of this 61 zone and spike down entirely without waiting for anything. Alright guys, I have reduced the order block, as you can see, to the bearish minimum, where the area and the zone I expect the price to tap into, before going up. So let's look for our bullish signal here. Alright guys, we are going to place this bearish signal. As you can see, we expect the stop loss to be at this place. Then the entry is going to be here. And we are targeting this place, the area of 3382, right? Coming Monday and Tuesday, this is what we expect the market to do. So guys, if you've not subscribed to my YouTube channel, kindly hit the subscription button and turn on the notification bell to stay tuned whenever I post a new video. Bye for now, and of course follow me on all the social media handles at Progress FS.